Welcome to Frankly Speaking with Sendra D, where we dive deeply and help you wake up to the essence of what it means to live a real, authentic, affluent life. Beyond the balance sheets, the bank accounts, the private jets, the political offices, into the realm of inner wealth and personal power. I'm Sendra D, your companion guide on this trajectory of truthful self-mastery as we celebrate your individuality and your sovereignty. Welcome to another episode of Frankly Speaking with Sendra D. I'm with Richard Mason today, a longtime colleague and friend, and over 20 years, actually. And Richard is located in Orange County, California.
Yeah.
And we are lucky to have him a second time on this podcast. And those of you who are watching, you can see Richard. And so it is an honor. Richard, thank you. So you are the CEO of Northern Star Mortgage. And I gave you a little background about you last time. Go ahead and give us a shorter version of your background.
Sure. Yeah. Northern Star Mortgage Funds. Basically, my career has been spent in finance, residential finance, and investing. Started out as a loan officer out of college, eventually got my mortgage broker's license in California, worked my way up the food chain, started a mortgage company, ran them, was very successful, did that for 10 years, exited that market kind of during the mortgage crash in the 2007, 2008, 2009 timeframe. Trying to figure out what to do at that point. And, 100% of my counterparties in that business went out of business in that time frame, so it was interesting. And God led me to the next phase of my business career, which was distressed mortgage note investing. It's actually a gigantic industry, but you don't really hear a lot about it, but it's huge. So transitioned to that. I've been doing that business since, I guess, 2010 or so. Opened up my own fund in 2016 for that business. And then about 7 years ago or so, as the yields started becoming more and more compressed, as the economy recovered and housing recovered, and portfolios that we used to pay maybe less than 50 cents on the dollar for were trading at 90 and 95 cents on the dollar, we realized that the wasn't going to be the best time to be in that business. So transitioned into private money, hard money lending, and have been pretty full throttle in that business for the last 7 years.
Well, wonderful. Well, for those of you who didn't catch the last episode, we talked about note investing. So make sure you look at the bottom of the video or the podcast. We have the link for the previous podcast on note investing. But today we're going to focus on private money lending. And we know that private money lending pretty much is the same as just a mortgage, except the fact that you're dealing mostly primarily with investors, people who are looking for yield. And so tell us, how did you get involved in private money lending?
It was interesting. I had a really good friend of mine who I've known for 20 years, and he owned a private money fund, a pretty good sized one, maybe $75 million at the time. And he kind of taught me the business. So it was great because he had 20 years experience under his belt, and he kind of fast tracked my learning. So instead of having to make 1,000 mistakes on my own, I just got to benefit from all the mistakes that he'd made over the years. And that's how we learn, right? And that was my entryway into the business. And he's been an ally ever since. I still call him to this day. When I come across something that maybe I haven't seen before, I still call him.
Well, that's fantastic. So now tell me, so you definitely, in order, pretty much a private money lending business is having a network of investors. Yeah. So you have a network of investors who are looking for yield, but you also have a network of investors who are looking for private money. That's the equation. Am I missing?
It is. It's really connecting capital with the need. It's interesting. This business has become a little more modern, I guess, is a good way of looking at it. I think there's a connotation of kind of hard money lending from maybe decades ago, and what's going to happen if you don't pay the hard money lender. And it's really transitioned. It's become a lot more mainstream. I mean, there's actually some very, very large, Wall Street has gotten into private money lending at this point. So there's multi-billion-dollar entities out there in this space where it was dominated by mom and pop lenders for the longest time. So our capital sources, we started off and we used in-house capital, and we still do in-house capital. And We typically have our own money into every single transaction to one degree or another. So we're confident in every single loan that we make. And then we have, of course, other investors who want to participate with us. And then we've even developed our next phase has been really developing institutional capital partners who will help finance in one way or another. So the business has really progressed in that way.
So maybe you will again run into Mr. Fink and
Yeah.
I can't resist. I don't know what it is. But anyway, so tell me, what type of projects are you funding? You're just still in the single family. It's not about necessarily the different asset classes. It's just strictly residential property, correct?
So our business and the growth path that we're on. So yes, we started out in residential 1 to 4. We started out doing the most simplest of loans. So somebody buying a inexpensive 3 bedroom, 2 bath house, and they want to do some simple renovations. And so the acquisition price, depending on the market, might even be just a few $100,000, and they might be putting 20 or 50 or $60,000 into a renovation, and it's going to be quick turn times, 2, 3, 4 months. They're in and out, we're in and out. That's kind of how we start. That was our first foray into the business, was doing loans like that. And then as you acquire more capital and as we learn more and developed our expertise in this arena, we've expanded our loan size, we've expanded our geography of where we'll lend, we've expanded our loan type. So we're comfortable doing loans that maybe the renovation budget is equal to the purchase price on the house. Maybe they're going to pay $200,000 for a house. They're going to put another $200,000 into it. That's another kind of step up in complexity for the investor and for the lender. And then we transition into doing ground up development projects.
Okay.
That's also just another level of complexity when you have site development and permitting and just,
Sure.
it's a lot more complex. And so we've become comfortable with that. We found some amazing third-party partners that help us with that, with the due diligence on the ground up construction projects and the managing the draws and the permitting and all that, things that they do all day, every day, and would take us a long time for us to become as good as them doing that. So we're happy to have those third-party companies on our team. And then really from there, it's about just how much capital are you raising? So can you go into larger developments? Can you go into luxury renovations or luxury ground up developments where they're, instead of maybe being under $1 million, you start doing stuff over $1 million or a few $1 million. I have a friend who right now is doing a huge ground up development in Beverly Hills,
Mhm.
almost done with it, and
So that
25,000 square foot house on a 2.5 acre lot in Beverly Hills. Its exit price is going to be around $60 million.
Hmm.
That's obviously takes a whole nother level of capital and expertise to confidently participate in a project like that. And then you can go beyond there. You can go into multifamily. So you can go into apartments, 10 to 500 units. There's people out there that are getting financing for multi-hundred unit apartment developments. The banks have pulled back to some degree in the last 12, 24 months, 36, 12, 24 months, with the commensurate with the interest rate increases, and people kind of see the economy slowing. There's a little bit more
sure.
uncertainty with some of the stuff
Inflation
happening,
and all.
especially economically. So there's even more of a place for secondary investors outside of the traditional banks to step in and provide some of this different types of financing, and that's happening.
So what kind of interest rates are we looking at in duration? What kind of loan terms?
So these are typically interest-only loans.
Mhm.
Rates start at 9.9% and go up from there. 10 to 12% is a pretty typical range.
Mhm.
You could be higher depending upon the nature of the project. 12-month terms, 18-month terms, 24-month terms, depending upon the project.
Mhm.
It's interesting. If you're doing business in a place like California,
Mm.
just the permitting and everything, it takes so long. There's so many barriers, especially in new construction, but even on when you need to pull a permit for a renovation. And the projects are typically a lot of times bigger in scope. Sometimes those loans take 2 and 3 years, where, if we're doing loans in the South, in Tennessee or Alabama or Georgia or Kentucky or places like that, I mean, sometimes those loans pay off in 2 and 3 months, 4 months, because it's just so much quicker.
Let me ask you, why do you think that is? Why do you think California is so complex and versus some of these southern states? You think, is it the government? Is it Mr. Newsom?
Definitely.
Who is it?
100% the state government, the
I
local
told you I
government.
was going to sneak in a little bit of politics.
Yeah, yeah, yeah. They're very difficult to deal with. And just from getting permits signed off, it's hard. And California's not the only place. There's plenty of other states and other municipalities that are very difficult. They're trying to manage growth. And so it's not all negative necessarily, but it does make the lending environment, the construction environment, a little more difficult.
Sure. No, I fully understand. I mean, when I was launching this podcast, people were saying, oh, please don't talk politics. We know about your politics. I know you can't stop talking about your politics. But I'm a business person and therefore, I cannot isolate politics. It is completely entwined. And when people talk to me about Donald Trump, how he was not a politician, I said, Donald Trump's been a politician all his life. He's been a developer in New York City. He's had to wine and dine politicians. That makes you a politician. If you've had to engage with them at their level, you actually have to learn the song. So, the reason why I bring up politics is not for me to tell people to vote one way or another. It's just to really inform people to understand what's involved and
of course,
estate world, especially at that level. I mean, you're dealing with, multi-million-dollar deal, especially when you're dealing with ground up developments, correct? You have to
well, absolutely. The government is so entwined in housing and in development locally, state-wise, on a federal level. I mean, the government is super entwined in all of this. So it is impossible to separate government policy from your business model. It's got to be an integral part of your business model. I mean, it has a huge part to do with site selection, states that you'll do business in, and localities that you'll do business in. And you have to check all of that stuff. And just taxation, like it's the biggest expense of any person or business typically is taxation, or one of the biggest. You can't separate that from your business model. So it makes a big difference.
Absolutely. I mean, I've invested in Texas and I will never invest in Texas again because they have so many different taxes on property. I mean, you have every day I would get a bill. I remember my first property in Texas, in Houston, more specifically. It could vary according to, the county, but Harris County, my goodness, I had at least like 4 bills. And I was like, and I'm used to Florida because my finance career started in Florida. And it was just one. And I would say, I paid this. And they said, no, it's a different bill. It's a school tax, it's this tax. And at the end of the day, you have no choice. You just pay it. But it was definitely a shift investing in Florida versus investing in Texas. What about you? Which county or which state did you say, I'll never come back? Where did you have the biggest hurdle that it made you just lose your appetite and just walk away?
Well, I'll tell you, from the private note business as well as the private money lending business, probably the biggest differentiator is just judicial versus non-judicial foreclosure states. And also, just without being political, but it's just a fact, is the red states from the blue states. And the red states typically are much easier to do business in. They have less compliance. They're less likely to just get into your business and make life difficult. There are states that, say, take, New York, for example. I've never done any new development in New York. I don't think I ever would. It's kind of like its own place, right? You have to be a New York expert to do business in New York from a compliance and legal perspective. But just like from a foreclosure, so you have to build in like a 5-year time frame for foreclosure if you want to. So I don't buy notes in New York, or if I did, I never have. And if I did, the discount would have to be astronomical, because if that person stops paying, they literally can avoid any type of consequence for that for 5 years. So you have to roll in not getting paid for 5 years into your performance model on a portfolio of New York loans. And there's other states like that, New Jersey and Hawaii, and there's other states that have very long time frames for that. So these are very important considerations, and it's why you really have to have an expertise, in this business too, and really in any investment. I would coach any person. You can't abdicate your, you know, investing your money to somebody else. Even if you have a stockbroker or not, you have to be educating yourself. You are ultimately in charge of your investments, even if you have a third party investing on your behalf for you. So in this business, there's a lot to know, and it's important that you've done your research and gain your knowledge and before you start putting your money to work.
That's fantastic. So there are two sides of this. So thank you so much for that in-depth explanation. So as I mentioned earlier, there are to your business, you're pretty much in the middle, and you have those with the funds and those with the deals, right? So how do you vet someone who has a deal? What's the approval process? Once somebody comes to you, they said they need some funds, what are the steps?
Yeah, that's a great question. So, one of the differences in the private money lending space is this is asset-based lending. So, you have the three pillars of underwriting for any type of lending, really, which is equity, income, and credit. So, equity in the property is the room. What if something, goes sideways and you have to take the asset back? Is there enough equity that you're getting 100% of the money you loan back? Income, it's cash flow. I mean, is it a person with a job or is it cash flow from a business? You have to look at that. And then credit, you have to look at your counterparty. So it's just a simple credit report if it's a homeowner, and it might be a little bit more complex if you're dealing with a business entity. But so for us, the first thing we look at is the collateral, the property that we're lending against, and our equity position. That's always number one. And that's why the rates are somewhat higher in private lending than they are in traditional lending, because we're not doing nearly as deep of an underwrite. It's a much more superficial underwrite, and we're also moving very quickly. A lot of times these transactions, and we funded loans in 24 hours before.
Fantastic.
This is a lot of times these people, they're looking for good deals. And
Right.
when you find a good deal, you have to be able to transact quickly in some situations. So speed, certainty that we're going to provide the capital when we say we're going to, speed of closing. So the first thing we do is we look at the equity position of the property, and
Sure.
that's number one. What's your down payment?
Mhm.
What's the exit price on the asset going to be? Not only what is it worth today, but what's it going to be worth once you finish renovating it? That's our number one consideration. And then we're looking, the ability for the borrower to pay. Do they have cash reserves? Because they have to be able, or are we going to roll the interest payments into the loan, which we do, depending upon the situation. And then you're looking a little bit at the counterparty. I mean, you want to make sure that there's no active bankruptcies. It's not as much of a credit focused lending process, but we do look to make sure that there's nothing significant happening from a
Correct.
credit perspective.
Right. But also you want to think about if this person is a seasoned investor versus a new person,
Well, that's the other aspect too, is their expertise. So and thanks for bringing that up, is another big aspect of what we look at is this someone who's been watching renovation programs and they want to do their first fix and flip, which is fine. We can finance that person, but we have to understand their experience level. And so the experience level versus someone who does this for a living and they have 4 or 5 projects going at a time and they're flipping 20 or 30 houses a year, or they've done half a dozen ground up development projects before. That also has a impact on how much leverage we'll provide.
Wonderful. Thank you so much for that in-depth explanation. But because cash is king, of course, somebody comes with a bag of change and they say, "Can you take care of this for me? I have 10 million that I want to put in your fund or I want to place somewhere. I'm not looking for a yield." So how do you screen people who are looking to place capital with you?
Sure, there's a lot of considerations, of course. So let's just bypass the whole, all the money laundering things and all that you have to do. If someone's offshore and they want to
Right.
send you money from some weird bank in another country, we don't do that, right?
Right out
So
of the
capital
tunnel
has to
from
come from
Mexico up into California.
exactly. So all funds have to flow through a US bank back from a US bank, and there's checks and balances that we have, but let's just set all that aside,
Mhm.
assuming none of that's an issue. Investor lender. So you have relationships on both sides of the transaction, and they're both equally as important. The relationship we have with someone borrowing money from us is just as important and equal to the relation we have with somebody investing money with us, right? So you have to manage both of those relationships. They're both critical. They're both important.
Correct.
So from an investment side, we want to get to know our investors. We
Right.
want to have a relationship. This isn't just a financial transaction.
Sure.
This is a relationship. It's an ongoing relationship. There's going to be questions, there's going to be different opportunities, so we want to manage all those expectations. We want to find out what's important to the investor. We want to develop that relationship, and we want them to understand our business and our business model. We want to make sure that this is the type of investment that they want this portion of their money going into. We think this is a great investment opportunity. It's monthly cash flow, it's interest only payments. From a risk perspective, it's low risk. We have large equity cushions. We're an experienced counterparty. We know what we're doing. We've been in real estate lending for, oh my gosh, Ken, 30 plus years now. And so we just want to make sure we're honoring all those relationships and everybody knows what can be expected from each person involved.
Sure. And it's also about building trust. So that said, what's the minimum capital injection that you would accept?
Yeah, it varies a little bit, but six figures typically. $100,000, I think, would be a starting point. And it just depends if there's different types of ways of investing. A very simple way is for someone just to fund a whole note transaction. So if we're funding a note for 100 or 200 or $300,000 and they want to just fund that note, that's a very simple way of doing it. We can also co-participate with them where we'll fund part and they can fund part.
And a sort of
Um,
syndication, you can put a team.
yeah, when you start syndicating, getting into a fund structure, it's a little bit more complex.
Mm.
But yes, all of that.
So
But the
do you,
easiest way is just to start with a, certain amount of money and just do whole loan investments is probably the easiest.
fantastic. Do you also accept money? We talked about, let's say there's no money laundering, offshore, shady deal making. Do you accept money from foreign investors though?
Sure, absolutely.
Okay. Do you have
Yeah.
any type of
But
visa requirement for such investors?
so it's not so much a visa requirement, it's more of just tracking the cash. Like I said, the easiest thing to do is, and what we requires, the funds have to come to us from a US bank. So the wire has to come from Wells Fargo or Bank of America or US Bank or whatever US based bank they're doing business with, because then a lot of the compliance and the anti-money laundering and all that stuff goes through the bank's filters. And obviously they're experts and they do this all day, every day. So that's one of our requirements.
Okay. And it's interesting because nowadays we have to be careful. Of course, we hear about, Russians were investing using different people as front.
Mm.
So do you do a lot of due diligence based on the regions, or you just pretty much, as long as it's a US bank, you're okay with that?
Well, so we want to know our investor just like we want to know our borrower. Regarding your question on due diligence on the investor side, so yes, having the money go through a US based bank is a very good start, but we want to know our investor just like we know our borrower. So there's an application process, there's an interview process, there's a background check process. We to this date have never taken money from an investor outside the United States just because it hasn't happened. Not that we wouldn't necessarily.
Fantastic. So how long does the money have to be seasoned in a US bank before you can even consider it?
We don't have a hard and fast guideline on that. Typically, what we really normally look for is 2 months consecutive bank statements showing that the money's been in there. That's
So
kind of a starting point for us.
sure. So
If we, yeah.
go ahead.
Well, I was just going to say, I mean, if we need to ask for sourcing where the money was before it came into the US bank account, we can do that as well.
That's fantastic. It's pretty much the same when you are buying an asset. I mean, if you are getting a foreign buyer, you have certain due diligence that you have to do, either a CPA letter or where they bank in the US to give them some kind of credibility.
Yeah.
And so, yeah, I could see why that would happen. Also, do you see the requirements changing? Is the SEC getting more rigid or more flexible in these terms for foreign investors or
Well,
for any
not
investor?
my area of expertise. I'm laughing because I just can't really see any government entity, the SEC or anybody else, getting less rigid. They seem to just be getting more and more involved. But like I said, we've never accepted third party capital that wasn't domestic.
Mhm.
So these are all just what ifs for us.
Sure.
So probably I'm not the best person to answer that question.
Well, you're you've answered it enough. Well, people become experts after the first deal. It's like always that first opportunity. So we'll never know. Someone listening to this podcast will be contacting you,
That's
hopefully.
right.
I
And
trust that this will be fruitful for you. So differentiate yourself from other lenders. What sets you apart, Richard? Why would someone come to you versus there are so many private lenders out there? Especially now, the institutional investors, probably Larry Fink is in the business now. So can you tell I really like Larry Fink? I really do. I do. I do. I hope he gets to listen to my podcast. Please send my podcast to Larry Fink.
just keep mentioning his name and all your podcasts, and the AI bots will eventually pick up on it, I'm sure. And
absolutely, I will hashtag Larry Fink. I welcome you on this show. I have a lot of questions for you. But that said, tied to Ukraine, by the way. But that said, yes. So what differentiates you?
Yeah, it's a good question, Sendra. It all comes down to relationships, I think, is really the most important thing. You want to do business with someone that you can trust. You want to do business with someone you enjoy doing business with. You want to do business with someone who does what they say they're going to do. You want to have certainty of closing. You want to have pricing. You want to have the right loan and the right terms that help people out. And all of this stuff is part of relationship. And so there's always that first transaction, whether it is on the note investing side of our business as a buyer or a seller, if it's on the lending side of our business as a private money lender, if it's on the investment side of our business as someone investing with us, there's always that first transaction. And it just comes down to building that relationship. We try and do the basics, Center. We try and have good pricing. We try and provide a great product. So really listening to our customer and finding out what's important to them and tailor making our solution to fit their specific needs. We try and act with complete moral standards and customer service at all times. Speed is always important in all the businesses that we're in. So we are always moving with alacrity, trying to get things done as quickly as possible and meet people's times frame. We're not so big that we lack flexibility, so we can really customize and tailor make solutions on all those fronts to our clients, whether they be a borrower, a buyer, an investor, whatever it is.
Sure.
And then it's really just building on that relationship. And we want to have our goal is to have customers for life. And that's what we're up to.
Absolutely. I know when we met so many years ago, I would have liked to just keep it at 10 years because that just dates me back. When I
Okay, we'll say it was 10.
Far back. No, I think I'm going to tone it down to 10 years. I've known you 10 years. So in all these 10 years, when we first met, one of the things we talked about is, because both you and I, we stand by our sort of spiritual principles. And I think that's what guided me over the years because do unto your neighbors as they would do unto you. And so is that one of the premises that you would be selected versus another? Because in our business, which is finance, investing, etc., I mean, like you said, many of your peers went out of business because of so many practices that were not in.
So many.
Go ahead.
There's been so many. I'm disagreeing with you.
Yeah, that's definitely something I would like to point out that probably differentiates you as well.
Well, yeah. So I'm a Christian, and I love that saying, like, who you are is shouting so loudly, I can't hear what you're saying. And it really comes down to transparency. And I think people are, especially over any period of time, the truth comes out, who you are on the inside, right? And do you really do what you say you're going to do? Do you really care about other people? My ultimate goal, some of the best advice I heard a long time ago from a very successful business owner who also was a Christian. He ended up becoming a pastor after I think he sold his business, had done well, was the only reason to be in business is to bless other people. That's really the only purpose of being in business. And so if you're just in it for yourself to make as much money as you can or to gain popularity or status or any of that stuff or drive your ego, and I know it's tempting for all of us, but for me, I try to stay away from that. And what I focus on is how can I be a blessing to somebody today? And I have found that if I keep my focus on helping other people, if my authentic purpose and goal is really helping other people, being a blessing to other people, things go great for me. I don't have to worry about me being taken care of as long as I keep my eye on taking care of other people. So I would say that that is the bottom line foundation of all my businesses. And that's a spiritual practice and that's a spiritual principle.
Absolutely. Because, the gifts that we have, the talents and the skills are coming from, the divine. So they're ours
Exactly.
to
They're all God given.
absolutely. And not to hoard, but to use to bless, because that's part of the legacy. And you have a child. I don't have kids, but I say that whatever room I step into, I hope I leave it better than I found it, either
Amen.
by what I said, the way I behave. It's just how you show up in your life, right?
People are watching.
People are watching. People are
Yeah.
watching. So, Karen, you built a family centered on Christ. And, I've met people who are not necessarily Christian, but they have very strong ethics. But for me, I do believe in God. I practice the Christian faith, but I also meditate. I have a Buddhist meditation practice. I live my life through the principles of recovery. And I always take inventory as how did I harm somebody else? What did I do? Because, we're not perfect, are we? A lot of people are going to say, oh, it's so easy for them, right? So I'm not perfect. I constantly take inventory to say, could I have done that better? Do I need to retract or, just take that back? People say sometimes I don't need to say it, but I don't say it for someone. As long as my conscience is clear, I'm okay with it.
Yeah.
So I can walk away. But if there's still some lingering afterthought of, I don't think I managed that as well as I could have.
Yeah.
It's maybe a conversation to be had. Well, Mr. Richard Mason, after those 10 years of knowing,
Love it.
I think it's been a pleasure. Do you have any final thoughts? Let's talk a little bit about where we are. This is June. We're looking at November 3rd. You are a business person, a businessman, and we're going to try to bring it to the political view of what's going to happen in the economy, you think, in the next 6 months. And what would you like to happen in November? And how would that affect us in 2025?
Well, there's a few things I would say in conclusion. One is I heard this is more of a global comment, but I just saw this the other day and I loved it. And it said, the life of your dreams is waiting on the other side of fear.
Yes.
And, so I've been meditating on that. And my advice and coaching to people would be just to take action, take risk, just go for it in business and in your life as a general principle. Regarding the economy and stuff, I have an opinion just like everybody else does. I think that we're in for a big adjustment. I don't think you can have the levels of government debt that we have in America. I don't think you can have the government operating the way that it's been operating. It really doesn't seem to be operating in the best interest of the people at this point. I think the bureaucracy has taken over to some degree, special interest groups. And I think that will change. I think those changes are happening. I think the American public is waking up and seeing that the government has gotten off track. But I think it could be a painful adjustment economically and socially. I listen to guys like Ray Dalio and some of these other people who are really smart and study these things. And it seems like that we're in for a bit of a speed bump economically, socially, politically. And I'm personally trying to prepare for those situations. But you never know. We can have a nice soft landing and our government could turn around and we can get some people in charge who, want to shrink the government and really focus on what's best for the general population and for the country as a whole. But I personally feel like we may have a few speed bumps in our near and not too distant future.
Well, you're in good company. Warren Buffett has warned, Jamie Dimon has warned. So I'm not sure about Larry Fink. His name again. And Larry, please come on my podcast. But yeah, so it's very concerning because the future generation, you have a child. And so what's going to be left for those future generations? So these are very serious conversations. Some people want to put their hand in the sand. I'm not one of those people. I know me doing this podcast is for you because I want you to be informed, which is why I brought a great guest, Mr. Richard Mason, who I've known for 10 years.
Yeah, 10,
And,
not 20.
10 years. I've toned it down. I've sort of took a decade off. But I enjoyed so much speaking with you, and I hope you will come back and join us. And definitely, the audience, I'm asking you to put your comments at the bottom of the video, the podcast, and let us know what questions you have, and also any topics you want me to address in future. How can they reach you, Richard?
They can email me. It's R is in my first name, Richard, last name Mason, Mason at northernstarmortgage.com, or they can go to our website, northernstarmortgage.com.
Fantastic. Again, thank you for joining us on a fantastic episode of Frankly Speaking with Sendra D. My name is Sendra Dorsey. I will see you very soon. Thank you
It's been
again.
a pleasure. Thank you.
Oh, and don't forget, subscribe to Frankly Speaking with Sendra D's podcast and join us every week as we uncover the stories of those who triumphed over life-altering challenges to achieve not just financial success, but a richer, a deeper, a more altruistic life. It's about time we redefine what it means to be a truly affluent individual. Don't you agree? So come and join me. And let's be unstoppable on this journey called life. Because here, affluence isn't just a buzzword. It's a path to waking up to your authentic being.